Bitcoin Treasury Companies, how they work, why they exist, and the future of corporate adoption. That's our theme. With Felipe Demartini, associate at UTXO Management, Sam Callahan, Director of Strategy and Research at OranjeBTC, Mason Foard, Director of Bitcoin Strategy at Melius, and Brian Dixon, CEO of the chain company. Please join me here on stage. Welcome, gentlemen. Now I'm going to be a polyglot. Hello, nice meeting you. Thanks for coming. Please make yourselves comfortable and enlighten us.
All right, everyone. Welcome back. Really glad to be here at UTXO. Our main focus right now is precisely the Bitcoin Treasury Companies. So, honored to be here with all these all-star executives right next to me. And I know Sam, Mason, you guys, of course, work day-to-day directly within the industry. But Brian, you, of course, CEO of Chain Capital, an investment fund. So I wanted to kick things off with you. Why don't you give us an overview of what is it that you do at Off-Chain Capital and how that ties into the theme of this panel?
Absolutely. Well, thank you so much. I hope everyone's enjoying the event today. So at Off-the-Chain Capital, we are a Warren Buffett, Benjamin Graham Dodd style of value investor in the blockchain markets. And so what we look for is unique ways to acquire blockchain assets at a discount or assets that we think are undervalued that have the potential to sell at a premium in the future. And we've been very heavy on the Bitcoin side of things with our investment strategy for many, many years. So some people may be familiar with years ago, there was a large bankruptcy called the Mt. Gox bankruptcy that occurred in Japan. It was the largest Bitcoin bankruptcy in the world. So our team was the one that basically created the mechanism to acquire those bankruptcy claims at a significant discount. And we leveraged that into new opportunities for Bitcoin. And as a core goal with our fund, we try to outperform Bitcoin after fees. That's what our goal is. And I've been in the Bitcoin space for about 14 years now. And I think once you fully understand Bitcoin and what it is and how important it is, your whole portfolio becomes Bitcoin. And if your whole portfolio, for the most part, isn't Bitcoin, you're looking for things that can potentially outperform Bitcoin. And so when it really clicks for you, you realize that every other asset in the entire world is actually more risky than what Bitcoin is. And if you don't realize that, with education over time, you probably will. And so our thesis is that it would be the best performing asset for decades to come, but then we needed to find unique opportunities that we think will outperform Bitcoin over time. And treasury companies, I think, is a great opportunity for that. Because basically a treasury company, in my opinion, is bridging the gap between the protocol layer, which is Bitcoin, and the application layer, that is the company itself. So it's creating this institutional bridge and opening new on-ramps and avenues for large-scale institutional investors and then also retail investors to get corporatized exposure to this unique asset in a brand new way that's never been done before. And if done effectively, it can create a premium opportunity over what you could earn on Bitcoin by itself. And so that's one of the things that we do. We look for unique ways to try to outperform Bitcoin, and integrating with Bitcoin Treasury Companies is something that we've been working on, and a little over, I would say around half our portfolio today is dedicated to that.
Okay. Yeah, there's a lot to unpack there. So let's take a step back and start from the ground and work our way up. Sam, why don't you give us an overview of what Bitcoin Treasury Companies are? Like, why do they exist?
Yeah, I would describe a Bitcoin Treasury Company as a public operating company that systematically raises capital to accumulate Bitcoin in an accretive way for shareholders. And so what do I mean by that is, if you just take a step back and think about the traditional debt-based financial system, there's a concept that Bitcoiners talk about a lot called the Callahan effect. Callahan effect is that those closest to the money printer benefit more than people farthest away. And so that's a problem. And if you think about large corporations or wealthy individuals, if they go to a bank, the bank is more likely to give them favorable terms because they're a less risky borrower. And then they could borrow a lot of money from these banks and then buy assets, and then the asset prices rise, and by the time somebody who's maybe lower in the socioeconomic status gets to that money, everything else is more expensive, and they feel the ill effects of inflation. Now, Bitcoin Treasury Companies are public companies with very strong balance sheets. And why that matters is we have access to capital, long duration, low cost capital. And so that's the first step. And then the second step is that really at the core of the strategy is we are raising capital, so our liabilities are priced in fiat that is depreciated in value, and we're acquiring an asset that is appreciating in value with that money. So, that whole system of liabilities that are in depreciating fiat currencies to acquire an appreciating asset, that's the core of the strategy. And because we're a public operating company, we have access to the lowest cost, long duration capital, where that makes it very, very opportunistic for us. And so I think that's what Michael Saylor tuned into when he started to do these convertibles and use leverage to buy Bitcoin. It's really at that core of like being a public corporation with better access to capital, and then using that advantageous position to acquire an appreciating asset with a depreciating liability.
Okay, so pretty much, right, considering the Cantillon effect, the pubco is much closer than a regular person, right?
Right. The idea is that a Bitcoin Treasury company can acquire Bitcoin in a way that's faster than an individual. So they would hold our stock because we can use our advantageous position to acquire Bitcoin faster than otherwise they could themselves. And that's one way they can increase Bitcoin exposure over time by acquiring our shares. So that's kind of the overall framework for all these Bitcoin treasury companies. Is I believe in this management team to execute on their treasury operations and to raise capital in a way that's accretive to shareholders, and they'll actually be able to give me more Bitcoin exposure than otherwise I could by myself.
I'm glad you touched on this, what I think is the key point, right? Accumulate Bitcoin. Because as Saylor himself puts it, it's just a race. Who can accumulate more Bitcoin before the door closes, right? Mason, we, of course, often call this the rate of Bitcoin per share or the Bitcoin yield. Could you unpack this a little bit in investment terms, just so we understand what that means for the investor?
Yeah, absolutely. My definition of a Bitcoin treasury is essentially a publicly traded company that makes Bitcoin their unit of account, right? What they're optimizing for is increasing Bitcoin per share over a long duration. And what we've heard today is many reasons of why Bitcoin is good, but ultimately Bitcoin is the first perfectly inelastic digital commodity. And let me break that down. Perfectly inelastic means supply is unaffected by demand. This is the first time in human history this has ever been in existence. It's a commodity, which means it's an asset without an issuer. It's like wheat, like gold. No one can manipulate it. No one can issue more of it. And it's digital, so it has all of the great characteristics of everything that's changed our lives since the internet revolution, since the digital revolution. So what a Bitcoin treasury company is trying to do is trying to accumulate as much Bitcoin as they possibly can per share on behalf of their shareholders. And there's many different strategies or many different avenues that they can take in doing that. At Meluse, we have a profitable operating business in which we hold Bitcoin for the long term, and then we take our cash flow and buy more Bitcoin with it. And right now we're at a size relatively small, smaller than Orange. Congratulations, by the way. Got bigger than us. But we're at a size where we can increase our Bitcoin yield substantially just from our cash flow alone. So if you're taking a asset like Bitcoin, which Michael Saylor has modeled, has a 30 CAGR over 20 years, and then you add Bitcoin yield, increase Bitcoin per share, if you model that out, the returns are substantial. It's like nothing else. And that's exactly what MicroStrategy, or now Strategy, has been doing in the US, that's why they're the most successful company in the US market, in the S&P universe. You saw the chart earlier. They beat NVIDIA, the Mag 7, all of them. And it's a pretty simple idea, but there's many different ways to accumulate Bitcoin. What Strategy is doing, and what many Bitcoin Treasuries companies are doing, is they're issuing fiat debt and they're buying Bitcoin with it. Essentially, it's a manifestation of a long Bitcoin, short fiat trade, right? And if you can do that at scale over a long time period, it's very successful, because Bitcoin has been the best performing asset in history and since its inception in 2009.
Brian, I think this ties up back to what you said earlier pretty nicely, because you mentioned how these companies have the potential to do what Mason and Sam just said, of course, outperform Bitcoin. So how does it look like from the investor perspective of, hey, I see these companies, I'm evaluating them, and then, because, you know, we saw it work with Strategy, but it's not necessarily going to work with every company, right? So what are the characteristics as an investor that you look for so that you do get the reward for the risk?
So with what we've looked at over time, the executive team is extremely important. So who's executing on the strategy? What is their background? Do you have people that are crypto native but also have traditional asset management experience and understand how to go leverage public market tools like issuing debt or equity? Another thing that's extremely important, and we've looked at a lot of Bitcoin Treasury companies, and one of the things that surprises me is this became such a very big trend very quickly, and we've looked at people that have raised significant amounts of capital that didn't even have a custody provider selected. And to me, that is just a complete red flag, right? So you want to make sure custody is completely central to what is happening with the Bitcoin Treasury Company. Because if you think out many years into the future, this is my personal opinion, I believe MicroStrategy probably becomes the most valuable company in the world, okay? And then in each new jurisdiction, these large capital markets, you'll have large Bitcoin treasury companies that become the most valuable companies in each of those jurisdictions. Because I do believe what's being built right here is Bitcoin denominated central banks, for lack of a better term, of the future. And traditional banks are not going to create Bitcoin and then just issue that into their existing products, because there's a lot of disruptive components of it. So what's happening is the new banks of the future are being created right here. And you have to have custody very secure, because there's going to be all sorts of security risk with that as the company scales up. In addition to that, I really think you have to look at what is the strategy for how quickly a Bitcoin treasury company is going to double its stack. And what I mean by that is where there's tremendous opportunity when you have new entrants into new markets around the world, you know, it's a lot easier for you to go from 400 Bitcoin to 800 Bitcoin than it is for MicroStrategy to go from 600 and approximate 40,000 Bitcoin to 1 million Bitcoin, right? There's just not that supply. So if you can get in with the right types of businesses that have good strategies and also very good marketing engines, because you want to have people that know how to tap into these marketing engines to raise institutional and retail interest from the investor bases to drive that capital, it'll give them the opportunity to bring in the fiat capital, convert that into Bitcoin, and hopefully double, triple, quadruple their stack of Bitcoin over time, which has the potential to drive the MNAV, or the premium, over the Bitcoin balance on the company balance sheet.
I think that's a great point, and it's not exactly intuitive from an investor standpoint. When you're evaluating a Bitcoin treasury company, the first thing you should be asking is, how much Bitcoin yield theoretically could I get, right? And exactly how you said, Strategy is already at 630,000 Bitcoin. So for them to double, it would be a substantial task. For a smaller Bitcoin treasury company to go from 1,000 to 2,000 or 5,000 to 10,000, it's far more likely.
And there are ways and ways, right, to go about this. You guys touched on a few of them. Why do you guys think, and then whoever wants to pick this one, please feel free. Why is it that you guys think that Strategy did it on the order that they did, right? So converts, debt, and then now preferreds. And we can see Saylor just like does not like to remember that he has some converts outstanding. And that mix, how do you evaluate that mix? And then Sam and Mason, as you guys look into Brazil, how do you guys see that structuring into your way of raising more capital to buy more Bitcoin and keep the flywheel going?
Well, I think Michael is like a true pioneer with this stuff, and he learned in the open for everybody. And he actually said this in interviews before. So I think in the very beginning, he even did a secured loan, traditional secured loan that was collateralized by Bitcoin. And he learned, oh, that's not that good of an idea during a bear market. And then he's like, these converts are good, but there's certain things about who is the buyers of these converts, like who owns them, and they're not really necessarily long his stock, right? They're arb traders, they're vol traders, and so, they'll buy it and then they'll short his stock. And he's like, well, I want people that are aligned, who are truly aligned with my vision. And it's also very heterogeneous when you go around and you're raising capital for converts. It takes a lot of time. You're negotiating the terms each time with each one, and it just takes time. He found that a perpetual preferred has all these benefits that converts don't have. Now, it's not necessarily to say that converts are bad. It was really powerful for Michael Saylor to do that, to raise a lot of money that way, to acquire a lot of Bitcoin in a way that wasn't dilutive to his shareholders. Now, what he thought about is, hey, there's maybe a way to do this that can better align the values with my company and the owners. And it's more accessible because you can do like a public IPO, so like retail investors could buy these products as well. But the converts, what you really got to think about are like two things. The terms. Michael Saylor's converts were unsecured, 0% interest, 0% coupon, long duration. Some of these other converts have a lot of restricted covenants that hurt their ability to raise capital and function as a Bitcoin Treasury company. And so you have to look at the terms of the converts and know when to say no. If somebody's giving you a lot of money and it has a lot of these restrictions involved with it, well, that's a problem. You maybe should think about that. The other thing is you have to think about converts in relation to the size of the entire treasury. Michael Saylor, he wishes that the converts weren't above his preferreds because it hurts their creditworthiness. But really, we're talking about, if you have 50% of your raise is converts, and they're secured by Bitcoin, so you have to encumber your Bitcoin, and maybe they're even over-collateralized, and then they come with all these different restrictions. That's what we call like bad debt, right? But if there's a convertible, if an investor comes to us and they want that product, and they say, hey, we're not going to short the stock, and it is a reasonable size in relation to our entire treasury, we are definitely going to take that into consideration because it's still a non-dilutive way to acquire Bitcoin for our shareholders in a creative way. And so I think Michael says, hey, I would go straight to the preferreds. But when you're thinking about a new market like Brazil, you had to keep your options open and be entirely flexible with how you're raising capital. And as long as it increases Bitcoin per share and doesn't impair your capital structure, then you have to take it into consideration because that's your job as a Bitcoin treasury company, to increase Bitcoin per share for your shareholders. So that's how I think about these different options. And maybe I'll pass it to Mason. He could share his thoughts.
Yeah, no, that was a really succinct response to that. I would say that the way that we view it is that we are open and flexible to different terms and different instruments in the future. And I think right now with the high cost of capital in Brazil, I think it is a challenging environment compared to other markets such as Japan or the US. So at least at Melius, because we have an operating business, we are able to take our profit, buy Bitcoin, or recently we've started to buy back our stock, which increases Bitcoin per share as well, because you're taking the float, or you're taking float out of the market. So that's one way that we are thinking about how we can increase Bitcoin per share. But converts and other debt instruments in Brazil are definitely a possibility in the future, and I think we are trying to figure out what's most advantageous for us at this moment.
That's good. So I do have one key question on on behalf of all investors, right? If the thesis is that, yes, Bitcoin is this apex asset, right? There's never been anything like it. It is better than gold in many of its qualities. Then why should someone consider the Bitcoin Treasury Companies, right? I know you guys mentioned the BTC per share, the Cantillon effect of being closer to the money printer, quote unquote. How does that translate into actual P&L, into actual ROI, right? Because the BTC yield, yes, you're getting more BTC per share, right? You're increasing your share to the, you're increasing your Bitcoins per share you have, but that's not something that gets distributed, right? So I think that does cause a lot of confusion. So maybe you guys could help clear that up.
Yeah, I'll tell my personal perspective. So Bitcoin is an amazing asset because you can take custody of it, right? If you're holding it in self-custody, you have no counterparty risk. And I view Bitcoin as savings. It's just my savings. I don't view it as an investment because I'm living under a Bitcoin standard. In the same way, Bitcoin treasuries are under a Bitcoin standard. So if I am going out and I'm going to take counterparty risk, I want to be paid proportionate to the risk that I am taking, right? So what a Bitcoin treasury company is to me is it is an investment and you are inherently taking risk, but the payoff for that risk is potential increased Bitcoin per share over time. And that's how I view it. And your point about it not being distributed is important. I think it's important for investors to recognize when Bitcoin is being added to the balance sheet, your shares represent that. And at any point, you can sell and convert it into Bitcoin. When it's added to the balance sheet and it's not distributed, it's actually tax beneficial, right? If it was distributed, it would be taxed. So it's in the tax sense, it's the best way for the company to keep its capital and the shareholders to not trigger a taxable event.
So I like to think of things in more of like a macro, bigger, long-term oriented view. And like I noted before, I believe these companies are creating these new forms of Bitcoin-denominated banks or financial institutions. So if I could rewind and go back in history and had the opportunity to invest and get exposure to the central banking system that was created around the world in the earliest phases of when that was getting created, understanding now what the monetization opportunities would be on that and the ROI over time, I for sure would have invested in that if I was alive at that point in time. But we couldn't do that, right? Now there's an opportunity to do that. So when I think about a portfolio construction as an investor, I do believe long-term Bitcoin becomes the monetary base layer for the whole world. And you want to have Bitcoin as a substantial part of your portfolio, and then you want to look for other opportunities where you can make Bitcoin work for you, in a sense. And one of the ways is like having a treasury company exposure within your portfolio as well, right? It's having the opportunity to accrete more Bitcoin per share. And Mason, noted living on a Bitcoin standard. I'm very much the same way. Like I think everything in Bitcoin denominated terms for many years. So if I make an investment in something, and I don't think that investment can generate me more units of Bitcoin over the timeline that I want to hold that investment, I won't make the investment because it's not accretive to me. But a treasury company strategy can be very, very accretive to your Bitcoin holdings and to your general ROI from how you expose your portfolio. And so I also look at it as this is what we're doing today. Like we're building the future of what I think this new banking monetary system will be with these treasury businesses. But what about the opportunities in the future that we can't even conceive yet? So I think you have to open your mind slightly to that. And what I mean by that is with the advancements in artificial intelligence, we're reaching a point in the very near future where we will have trillions and trillions of autonomous bots that operate, that are performing virtual labor, that will need to get paid for the electricity and computational expense that it takes to perform this virtual labor, either through requests and tasks that we require or that they're doing in a virtual economy. These agents and bots can't set up an account at a traditional bank. What can they do? they can interact in a digital asset. But what if one of the things that Bitcoin Treasury companies do in the future is they act as an institutional gateway between the cyber world that is artificial intelligent bots and the monetary system that is Bitcoin, and have some type of mechanism that it could actually create a segue into those two things. Now that's thinking further out into the future, but that's how I think about things. I think right now we're building unique ways to have retail and institutional investors get to exposure in a Bitcoin denominated fashion. But this is going to grow substantially over time as there's new applications and interfaces that become to exist that we can't even think of today.
Yeah, look, I dedicated my life to teaching people why Bitcoin is a good asset to own and why self-custody is important. If you care about censorship resistance and taking ownership of your wealth, nothing matches Bitcoin in terms of its risk-adjusted returns. But this isn't, a Bitcoin Treasury company is not passive Bitcoin exposure. You're investing in active Bitcoin exposure, a management team's ability to raise capital and increase Bitcoin per share to outperform the Bitcoin, you know? And so you're trading, instead of the risk surface being the protocol, a decentralized protocol, you're trusting, when you own regular Bitcoin, spot Bitcoin, you're trusting that the protocol is going to remain secure and decentralized, and there's always going to be 21 million. When you invest in a Bitcoin Treasury company, the risk surface shifts to people, to a management team, to the execution. And so there's trade-offs there because you're trying to outperform Bitcoin, but the risk surface shifts. And so you have to understand the trade-offs. But you know what Brian's alluding to, I think, is the optionality of a company having a lot of Bitcoin on their balance sheet and the ability to accumulate more. Like I said before, an individual cannot, you know, raise money with a convertible debt offering. You know, a company can't. And so you're betting that they're going to use these tools available to them to increase Bitcoin per share and outperform the Bitcoin. And you know, I think people, the optionality, what Brian was talking about before, it's also, you're betting on the management team to maybe launch Bitcoin-backed services, financial services products. You know, our team at Orange, one of the things that I think we bring to the table is our team is very experienced in capital markets as well as Bitcoin. We've worked in the capital markets, launched financial products, Bitcoin financial services. We worked in it for a number of years. And so we think that Brazil is a really interesting market because, you know, having played a small role of building out the infrastructure in the United States for Bitcoin over the last 5 years, I look at Brazil and I just see so much potential of what needs to be built to allow better access to Bitcoin. And I think the people that are primed to do it are Bitcoin Treasury companies in those regions. And so I think that's what you have to think about when you're investing in spot Bitcoin versus a Bitcoin Treasury company is the risk trade-offs, but then the potential outperformance for all those reasons that I mentioned. And then just one final thing that we didn't even talk about is just some investors cannot buy spot Bitcoin. They're restricted due to local regulations. Large pools of capital, pension funds, insurance companies cannot buy spot Bitcoin. And so, but they can buy Bitcoin-backed securities, Bitcoin-backed credit instruments, equity. And so that's another reason. It's not that they don't want to buy spot Bitcoin, it's that they can't, but they can. We're building Bitcoin-backed exposure in different products that fit into their investment mandates. And so that's just another kind of side of this whole theme and this trend that hasn't really been mentioned on the panel yet.
Yeah, and I wish we had 40 more minutes because there's a lot to talk about on that topic alone. But yeah, we're coming to a close. So thank you very much, Sam, Mason, Brian, and thanks everyone, and enjoy the rest of your afternoon.
Thank you.